Hey, what's going on? Happy Saturday. It's August the 17th. It's approximately 10:30 a.m. Um, I had a bit of a late slash early night, so sound a little groggy. I've only been up about an hour, so kind of wanted to go ahead and get this weekly recap posted, get this uploaded. Also, give you guys an update. So I'm kind of on the fence about whether or not I'm going to go back into live streams. I was actually listening to the the perspective of somebody that I respect and quite a bit of like the eye opening, aspects of looking at price and measuring and determining and all of those things. So somebody, not just some random fly by night, somebody showed up, but just an actual discussion about what what these journeys look like, what the process looks like, what the business of trading looks like, and ultimately how it's realistically like it's and you've heard this before, many different people, like it's a personal journey, it's a personal thing. So whenever you're live streaming or even these videos, like it's obviously it's subjective. I've always looked at it from a standpoint of it's just information, it's just somebody else's interpretation of what they see, whether it's an anticipatory reflex in them to try to garner more subscribers or a broader customer base, if you will, to be able to sell and market to. I guess there's always that aspect of it. I've just never attributed like these types of videos to that. Like I've always said from the outset, like I'm never gonna try to sell anything. Like nothing. Not even a goddamn mug or a t-shirt. Like nothing. I'm not interested in that. It's an information on this journey and an information on this journey only. Um, it's what I see that might be helpful. It's what I see, just based upon my methodology. But in no way does that inhibit, anybody from making a decision for themselves, right? So having said that, um, listening to this gentleman this week, and then just kind of pairing and partnering that with a couple of my own thoughts, I'm toiling with the idea, something in my mouth, of just kind of maybe um, scrapping the live trades because, in all honesty, the purpose is probably more or less or more so for me than it is for anybody else. The other idea is I would still want the information because at some point, yeah, if you record the session and you win or you lose, that's still a good tool to be able to go back to and reevaluate. Not for, again, for views, for clicks, for customer base, for subscribers. Not for that. You go back and you look and you see, okay, well, here's where I made an error in my trading plan, or here's where you know I've reduced or I eliminated the whole mechanical process of this plan, right? You're able to identify those things and make the adjustment. So while I was seriously considering a live stream today for crypto, just pick an asset, go in. I may still do that. I don't know, but it goes back to that whole inviting the you're doing something that doesn't work and if it fails or whatever, and that's again never been my thing. I could you know give two shits as to whether or not somebody thinks that my live trade that fails or my live trade that goes to a stop loss invalidates my idea of where I am in my journey. I mean, it doesn't matter, honestly, where anybody is. Inevitably, you're going to fail somewhere, right? No, like, show me the 100% strike rate trader, and I'm gonna show you somebody that's deleted, eliminated, or hasn't exposed the losses to you. So it's really it's as simple as that. There is no sure thing, right? Nobody's gonna be 100% accurate. And like I said, if they are, that is the person that I think collectively we could all say is going to be the person that's full of shit. That person, the person that has a 30% strike rate, the person that's right 30% of the time, the person that live streams whether they're showing themselves or not showing themselves or whatever it is, and then they're losing. Somebody could come in and be like, "Well, you don't know what the fuck you're doing. That's why you're losing." Or you're reading strike. You don't know where that person is in their journey. Is what I'm saying. That's somebody that has the balls of the brawn to step out and say, the hell with what everybody else thinks. I'm doing this for me, which is kind of what I've done. I could give a flying fuck whether somebody feels like it. Excuse my language, but that's just how I feel about it. Um, and because I feel that way, I guess, you know, I take back that half-assed apology. Because if I don't care, then, you know, if it offends you, if it hurts your feelings, then you could do what a lot of other people do. You could click right on through or click off and go watch something else. That's fine. Um, but I'm unapologetic when it comes to that. The reason why I'm even considering is because it's a time factor. Am I wasting my time? That's what my thought was. Am I wasting my time going through doing these videos, doing the weekly recaps? I don't think that I am, because I think that when I'm not doing this, which is kind of just going on and on, you know, rambling and trying to give backstory and context to certain things, like, it may seem like something else. But like I said, at the end of the day, it's informational. It's what I see. It's how I see. It's what I read. And it's just that. If it's helpful, if it's beneficial, great. If it's not, you know, hey, on to the next, I guess, right? Okay. So, um, I don't know that I'm gonna do the crypto live stream later. Maybe, maybe not. I don't know. If you see another video later today, it may just be that. As far as my session planning, I am anticipating either next week or the week after to start trading in that Top Step XFA. I've just not felt like doing it, to be honest. This past week with CPI and a couple of different economic factors, one Fed head speaking, and the sentiment of jobs and the sentiment of what on Bloomberg, at least on, I believe that was Thursday, we had a financial strategist speaking and trying to be kind of nonchalant about um, I don't want to say, you know, I don't want to quote her and not remember, because I don't remember her full name. Her first name was Katie. I cannot remember the strategist and the fund or the firm that she was on, speaking on behalf of, in terms of speaking on the overall of the financial markets. But one of the things that she said that I thought was somewhat interesting, and you know, I hardly ever watch Bloomberg, to be honest with you. I was just looking for something to listen to while I was looking at the market, and I happened to look over at, you know, because anybody that's watched like Bloomberg News or CNBC's financial markets, I think that's the name of the segment. You know, it's basically a round table. They're sitting around a table and they're talking. But it was a look on her face where, you know, she's talking about not so much the economic uncertainty, but she's talking about, you know, Fed's cutting rates and blah blah blah. And then she starts to, you know, she smirks a little bit. She smiles and she's like, yeah, obviously, you know, there will be times in the future to be able to buy at, you know, a short term sell off. And what caught me was the smirk about the potential to buy, in the future for sell-offs. Not indicative that her mood can't change, but it's just the fact that I'm not a financial advisor. Let me start there. But when when the jobs number came in on Thursday, the market did, in some estimates, the complete opposite of what might have been anticipated, because those numbers came in cooler, or excuse me, they came in higher than the expectation. Now, here's what I'd like to go back and show you on and it's not on this chart, it's on my other chart. This is a different NQ chart. Forgive me, forgive me, forgive me. I was looking at this and I'm like, my annotations look a little different on here. Let me pull up my let me pull the other one up for you real quick. This is how I don't, for other people that, like, I don't pre-plan a lot of this stuff. I mean, I plan. It's just kind of like we're gonna go with but I've got a lot of crapola on one chart, and not a whole lot on the other. So one sec, we're gonna switch over to this chart. All right, cool. So this is a 4 hour from my NQ chart, which is a little John Maddenish. Okay, so and here's one of the reasons why. This is probably going to be the first week that I can actually say that this is a weekly recap, where this is why I don't follow financial sentiment in the news. So I'll just use my pointer, because, like I said, I've got a lot of stuff on this chart, and some of it is still going to be relevant, which is why I'm not taking it off, and why I have that other chart, which looks a lot cleaner. Okay, so if you look at this area down here, okay, that I'm just swirling my mouse over, this was the 4 hour sell side liquidity low for the last 2 weeks. It's literally in the zone. It's really this black horizontal ray, okay, that runs. But this has been the last 2 weeks 4 hour weekly lows, okay? And what we experienced, this was the 1st of August. This is the 4 hour. Let me pinch this down just a little bit. But what I'm trying to show you is we had 212. So 2 weeks ago, this was the 4 hour high up here. 2 weeks ago, zoom back in. I can do this. 2 weeks ago, this was the 4 hour low. Last week, this past week, okay, this was our 4 hour sell side liquidity low. Last week, this was our 4 hour buy side liquidity high. So price opened here. I have this annotated as my weekly open. Hang on, let's see. This is, yeah. So this is this past week. So here's the way to interpret this. Here's what's important. Doing the recaps. So 2 weeks ago, we'll do it this way. 2 weeks ago, what we experienced was I'm trying to figure out how the best way to do this for you. Second Sunday. Bam. One second, chat. Okay. So we had an open here. Okay. This is Sunday, the 4th of August. That's this candle here. So when you look at that and you say, okay, I'm gonna consolidate this a little bit. So we're just looking at structure right now. Okay. Just from a structural standpoint. When this candle opens, we don't have a low over here. We don't have a 4-hour low. So you're going to have to go back and find what's the most recent low. Okay? So the most recent low to that first opening is going to be here. I'll probably have to make this like a freaking 4 and whatnot. I don't want to add more crap, but just for the purposes of showing, that blue shows up pretty good. Yeah. Okay. So this is going to be considered, this point here, actually make that. So this, I'm just gonna type, and I'm gonna put the text in here for context, and I'm gonna have to make it huge so you can see it. August 1st week, 4-hour sell side low. To 40. So let's do bottom center. Actually, let's do bottom right because we're gonna come back over. All right. Okay. So that's what that is. So we're going back 2 weeks. I'm gonna give you a 2-for-1 this week. So what have we done here? We've identified basically this horizontal ray. This is going to be your 4-hour sell side low, liquidity low, because when price opens here, okay, we don't have a low to say okay, price is going to do. We don't have that, so you're going to have to go all the way back to find it. So you can call this hindsight. You can call it what you want. It is what the fuck it is. Simple. It is what it is. You could back test this. You could try it, like, again, and I've said several times now. You could back test it. You could try it. You could see, if you can determine what those mitigation levels are, where they occur, time based, not time based, whatever. You can go look. Okay. So that's the low. This was a clear high. Right? In relationship to where price opened, this was a clear buy side liquidity high. That was 2 weeks ago. So 2 weeks ago, price opened, it cleared the sell side, okay? Cleared that, and it did it on Sunday in rapid fashion. And then it kind of just it started to retrace, started to go long, okay? We had some sell-off. This was Wednesday, August the 7th. So anybody that remembers 2 weeks ago, Wednesday, it was like the sky is falling. Okay. And again, there's a reason I'm on a 4-hour. We're gonna do this. We're gonna do last week, and then we're gonna do what I would anticipate this week coming up. All right. So here is the move back. Wednesday, sky's falling, sky's falling. Not really. Sky's not really falling, but we'll get to that. We'll get to that. All right. So what you do have is you could call this a pullback, which is what now hindsight will show you it was a pullback, right? You have this liquidity that's taken here, and then you have a move back up. But I'm going to bring your eyeballs to something here. You have a fair value gap that's sitting here. You have another fair value gap that's barely been tapped into here. This was on Friday, August the 9th, where that um, slight tap into this higher fair value gap was reached into. This fair value gap, interestingly enough, was an inversion because you had a bearish fair value gap on this side. So this was an inversion that may have given you the context to want to take this long. Okay? Possible, maybe, maybe not. So 2 weeks ago, we were left with sell side liquidity had been taking. We were still targeting this buy side. But within the week, because of economic news, because of other economic factors, we weren't really going to rally all the way up here. That was just kind of inevitable, but you couldn't really see. You didn't know, right? This was the expectation 2 weeks ago. I also marked out the expectation of this 4-hour fair value gap because in my mind, I didn't really know how this was going to play into CPI or anything else, which we will come to. Because again, by the time the week closed here. Where we at? Yeah, the week closed in here. All right. So while we had this closure, we were on the way back up to the 4-hour high. So then it became, okay, so what are we now looking for? So the week closed, then last week opened in this range. Now I can zoom back in. So now we're current. I've never used that zoom tool, so let's not do that right now. I don't want anything going bye-bye. All right, that's pretty robust, I would say. Okay. So now we're into this current week, this past week. Here's Sunday, August the 11th. This is your candle. So as this candle begins to form, this is the 4-hour high. This was your 4-hour low. Okay? Now, this 4-hour low, I'm just going to go back just a little bit so you can take a look and you can see. And let me take annotations off for a second. So just not to be confused, my cursor, my mouse, this is the Sunday opening candle that I'm moving up and down on. This candle right here. This is your 4-hour high right here. This is your 4-hour low. But look at what this low is sitting inside. It's sitting inside what? A fair value gap. So I talked about this 2 weeks ago. May have mentioned it last week. I'm going to mention it again. Anytime you have a higher low sitting inside of a fair value gap, you should be saying to yourself at some point in the future, in the very near future, depending upon what level of price action you're looking at. If you're on a smaller time frame, if you're looking at it fractally, it might happen sooner than later. If you're looking at a higher time frame, it may happen later than sooner. However, it speaks volumes to at some point this low is going to be targeted because it's sitting inside a fair value gap. It's going to be targeted for a liquidity sweep or run, either or. Okay, so this is important to just reference. because this may be, I don't know. I can't really say definitively because I'm not a composite operator, but just based on how maybe the next week or so set up, maybe in a month, 2 months time, this might become important. This low specifically may become important in about a month and a half, 2 months. It depends. Okay, so that's a recording. That's like I'm on the hook for that. All right. So now that I'm on the hook, now that you see sell side, now we'll come back into this week. So this week we see the run up, right? And interestingly enough, we do see the 4 hour buy side liquidity taken. So I will say again, and I'll share this. I think I've already shared this. My trading model is really, I try to say it's really simple. I start at the weekly. I mark out the weekly open. I drop down. I look at the 4 hour. I look at my 4 hour sell side liquidity. I look at my 4 hour buy side liquidity. I watch and I wait for one of those to be swept out. I look for a potential change in the state of delivery or a market structure shift. I'm looking for the context to then take whatever position I'm able to technically and mechanically get into to run the opposing side liquidity. It's really just that. Okay. Now, why didn't I do that this week? Well, two reasons. One, I'm kind of watching price. Two, I already knew that we had economic drivers that weren't really going to be maybe conducive to moving the market in that specific technical framework, that mechanical framework. There's going to be manual intervention. Okay. The other reason, taking a break. Still watching price. It's taking a break after passing the combine, which I think was just a responsible thing to do. Because at the moment we get the sweep up here and then you get this candle during the week to say, oh, yeah, we can target this. Context. I always talk about context. Did the previous week deliver? Oh yeah, that's right. The previous week didn't deliver. Yeah. Remember that? Remember this back here? Remember this clear of the previous? And we were working our way up to that previous 4 hour buy side liquidity. So price has already given you in this move here, this low, and then you've got basically a volume imbalance that's sitting in here, but you also have price that pushes back above. It's starting to rally bullish. It's going long. We've already taken sell side liquidity from the previous. Now, does that mean from a previous week sell side it can't come back and take it again? It doesn't mean that. Context and the overall structural delivery, right? The overall delivery, and this is a 4 hour, so this is not a 4 second or 4 minute, right? That are going to be intermediary structural levels. Fractally, they will still react the same, but again, smaller time frame in intermediary structure, right? Or very short term structure. This on a 4 hour is telling me that there is a structural move and the bias is bullish. This has already happened. It's bullish. So my context this week was, okay, we're not operating independently, meaning we're not only operating off of this previous week or this week's opening price, a 4 hour buy side and a 4 hour sell side liquidity level. We're within the previous week's delivery still. How does that play out? You get a recalculation of orders. You get pairing in this short. You get this run above. This happens on Monday. So these two moves actually happen on Monday. And now, what does this become? And I know you could say hindsight, whatever. It's fine. It's fine. Hindsight doesn't dictate that we were already in a previous week's four range, 4 hour buy side sell side liquidity range. It didn't. It didn't. Hindsight didn't initiate that this week. That was what was shown on the chart. Okay, so when you get this abrupt close, this open, it doesn't take the liquidity here, but it takes this liquidity. This is kind of like that. I wouldn't necessarily call it a Judas. I wouldn't even call it a false move. I would literally say this was going to be to induce sellers, retail, right? And this would be my hindsight look at it. I'm not gonna lie there. I will say that's what it, now looking at it, that's exactly what it would have been indicative of. And the reason that I can say that with a great degree of clarity is you've got wick, right? You've got three in succession. You've got basically that wick that breaks the 4 hour buy side liquidity level. You have a revisit here as well, which takes that out. So it's a higher push. So this bearish takes out this bullish wick. And then you get this closure that's all the way inside. What do I always typically talk about? Let the candle show you where. There's a body closure so far below this candle, but that's a small wick. It gives you the range. It's so far down here. What would you anticipate? Well, you might anticipate an open. Maybe it doesn't clear this liquidity, so it makes this a low, which again, by virtue of just candle structure and price delivery structure, this might have also given the hint that price wasn't interested, but not by itself. This was a candle, like I said, that kind of would tell you maybe, just maybe, but you still wouldn't have known, because this candle opens, it comes down. This is the mitigation point. This is basically your manipulation into this body's candle. So that's about, and I'm eyeballing this, obviously. Maybe that's a 50% mitigation. Maybe that comes into a fair value gap on this candle. On a lower time frame, you see a fair value gap or something in there. It reaches all the way up, but then it closes where? Inside the body. So this body, inside this body. What might that tell you? Just by itself, if you're just dealing from a candlestick structure perspective, you would go, oh, this is definitely going lower. And again, why would you think that you were wrong? You might, it's one of those things where even if you said, hey, this is short, guess what happens? This candle opens, you do get a very short term run short. So this move here, that could have made you profitable. So you still wouldn't have been out. You wouldn't have been out in the manipulation phase here and on this candle. You ultimately, yeah, I mean, you would have outstayed your welcome in here for sure. And when it closed, yeah, you would have been in the red probably. But look at all of the signs here. I want you to look at the signs, but then I'm gonna bring your attention back to this. And these are things that help build some level of patience. And I would tell you, like, let it build some patience. This candle opens. There's your manipulation. It does not take out this liquidity when it closes. So even though it opens, it mitigates, it pushes, right? It takes buy-side liquidity on a very short term. It does take 4 hour buy-side liquidity. But again, where is the previous week reaching for? It's reaching for the previous week 4 hour buy-side liquidity. So even when this candle closes, if you stop just on Monday, buy just Monday, what has Monday shown you? This is 2 o'clock Monday. and this is a 6 p.m. Open. So what is like? We're not gonna count this because it's basically it's 6 p.m. So it's not regular trade hours. What does it show you? It shows you that Monday already put in a low for the day. That's your low. The structure says that's the low. But it also shows you something else. Just Monday. We're still just on Monday. This is going to also be reflective of what? The high for Monday. Short, low, high, buy. So sell side, buy side, right? But again, I'm going to say it again. I know, broken record. I'll say it again. We're still reaching for the previous week 4-hour buy side liquidity. So the buy side taken out, it basically tells you here, just looking at Monday, there's a likelihood that we may not get down here, but you don't know that because it's Monday. So 6 p.m. open, we go into overnight. What do we see? Another run on this liquidity. So there are some people, there's some traders that are out there that have a strategy where they don't trade Mondays. They wait for the Monday range to show. They wait for Monday's range to potentially open into Friday PM session. And then they do the same technical, mechanical, and there's nothing wrong with it when it delivers, unless there's another context. There's another confluence that they can bring into play to take those positions. But they don't trade Monday. They wait for the Monday range to be established. They then wait for what? A purge or a run on buy side, sell side liquidity for that Monday range. They wait for a structure shift. They wait for a change of state of delivery, whatever you want to call it. They wait for whatever their trigger is, their point of entry, which is going to be, it could be any concept, fair value gap, mitigation block, breaker block, like whatever it is, and then they're going to target the opposing side liquidity, right? So here and again, here, what do you have here? You could say, okay, well, maybe this was Monday range, right? But now we're in an overnight hours. So this is New York PM, or not PM, excuse me. This is New York 6 p.m. open, where futures opens again at 6 p.m. This is the 10 p.m. Still moving along. You could say, okay, well, maybe it's mitigating something in here. This now becomes the 2 a.m. So you have basically a midnight open in here, right? And I don't know for 100% certainty. This manipulation at the 2 a.m. candle could be a portion of that because, again, this is a 10 p.m. to 2 a.m. So there's something that occurs in here. So a portion of this manipulation and a portion of this bullish and this manipulation is midnight, okay? But 2 a.m. candle opens, it mitigates, it pushes through now. This is Monday buy side liquidity. It closes inside this wick. And now we get to 6 a.m. 6 a.m. opens. What does it do? It reaches all the way back in. Right? And it doesn't completely clear. Let me see if I could zoom in here so you could see. So this is your 10 a.m. or excuse me, 10 p.m. This is your 2 a.m. And this is going back to the high of Monday. So this is the high of Monday's range, this candle here. 2 a.m. candle opens, mitigates or manipulates. It pushes up. It wicks, so it clears the Monday range, the buy side liquidity. It clears it. It closes. Now 6 a.m. opens. Again, kind of as we were speaking of previously back in here, where I said, hey, if this candle closes inside this body, when the candle opened, the manipulation, you could have traded this back in, you could have been profitable. Obviously, it wouldn't have worked out so well. So we have the same scenario again here. Same, it's like almost, it's almost the same thing. It's not quite, but it is essentially the same. You have the Monday high swept out or manipulated in pre-London or London, which is typically a manipulation session. Okay, you get manipulated into this swing, so you could say, hey, if you're whatever kind of trader you are, I'm just throwing these out because it might apply to somebody. It doesn't apply to me, but somebody would look at this and say, ah, we took out that buy side. The price is gonna come back down. So this entire wick on the lower time frame, you've got all kinds of structure in here. So somebody literally could have waited and completed their week in trading just on this wick retracement before the close. And if they wanted to hold it, they could have in the next 4 hour session, because what do we get? We get an open and we get a direct manipulation. But I want you to notice something. This 2 a.m. candle, the sell side liquidity taken. This 10 p.m. candle, and it is electronic trade hours, or it's not regular trade hours. So you could say liquidity doesn't mean anything because it's not during the actual market. Well, I disagree, because now we're into London. It's still electronic trade hours, but you can't say London liquidity is any less valuable than regular trade hour, New York trade hour liquidity. I mean, it's still serving a purpose, right? My point bringing this up is you've got sell side liquidity taken here, and in this 10 p.m. candle, you have sell side liquidity that's taken here. But this is a 6 a.m. candle. Okay? But again, it could be hindsight. Call it what you want. I feel like, just looking back at this week, the 6 a.m. on Tuesday was kind of like the catalyst to get us closer and out of this range, to be able to set up the CPI. And I think that was the only thing, and that's one of the reasons why I didn't trade this week. I think some of these moves were to put price in a place where composite operators and those that are looking to accumulate whatever positions they're looking to accumulate, to mitigate and get out of positions they're trying to get out of. The Monday overall, the trading range for Monday and Tuesday was to position the market to where the ultimate price fluctuations and the speed under which price was getting from one place to the next, that was set up between Monday and Tuesday. So maybe a little bit of reading price and managing and sitting on your hands a little bit, like I said, to come back here and look at this and go, okay, well, hell, that's a low. I know what this is showing me, but I need you to show me more, and be able to say, hey, listen, if you close below this, right, in any of the next 2 4-hour candles, I'll just see if there is a higher probability to get back to this 4-hour low, which we don't see. Okay, didn't happen. So 6 a.m. price runs away. Now we're into Tuesday. This is Tuesday 10 a.m. runs. This is Tuesday 2 p.m. runs. And we're back in the same kind of setup. We're getting one side delivery. We're not getting any, not really getting any retracements, no nothing. So this move, and this is why I said Monday and Tuesday. Tuesday set the stage for price to get where composite operators needed it to be. So it ran, all right? Um, we get into the overnight Tuesday hours, and you get this minimal retracement. We just talked about this a little while ago, right? This isn't necessarily a low, but this is the formation of this fair value gap. That's your fair value gap. We're gonna move back into that at 6 a.m. Wednesday morning. Let me move this just for a second so you can see the yellow highlighted box is what I've annotated as initial balance. So there you can see that low inside the fair value gap. I'm gonna move that back. Okay. So we've tapped into the fair value gap, and then we've exploited it here. This bullish wick comes all the way down to form basically the low of this initial balance. And then I also had this in here as an order block on a lower time frame. That's why that's sitting there. So I know you're probably looking at that like that's not an order block on a lower time frame. And I'll bounce down. I'll let you take a look at that and see that. Okay. But this is the mitigation back in. Wednesday morning, data comes out. This is 10 a.m. So the data's come out between this wick closure, and then this 10 a.m. and open. This is the manipulation down, and this is the springboard back up. So again, I'm not saying that my way is the right way. I'm just simply saying I'm gonna let you show me. And it's not a bad idea for you to, again, I will preface these remarks by saying go in, look at your charts, look at price, back test it, back test it, back test it, back test it, and just study price to where don't come into every week looking for what is self-contained within that week in terms of what liquidity is being taken and where we're going. Always have a reference of at least 2 weeks or at bare minimum the previous week to see what may happen or what might not allow your targets to be run in that week, right? So again, the context is still, for me, because all of the fundamental shit, all of the financial sentiment, I could care less. I pay attention to it long enough just to see, okay, you guys are saying this, you're looking or you're trying to suppose people to do a certain thing based on the information that you're spewing. So you're trying to get them to funnel or pile into whatever fits the whole commitment of trader ideal. You're trying to, stir that pot to angle it to a percentage that's going to favor, you know, institutions to say, hey, we can run all these stops because we've essentially set them all up to funnel into shorts because of the data, the data. But the data wasn't, like I said, it wasn't really backed up. You can go to my FX book and go to the economic calendar, and a lot of times what it'll show you is, and it's been a minute since I've been there, but if you're waiting for a report to come out, a lot of times it'll tell you like what the consensus is, and then what the actual, right? And then there's a footnote that's usually associated. It doesn't matter what the economic report is. It doesn't matter the country. It doesn't matter what is being sampled or what the report is being generated on. In every instance, in every country, in whatever that instrument or that financial market is, it's going to give you a footnote that says, in most cases, if the actual beats or is better than the consensus in this particular aspect of this instrument, if it is better than expected, price would be anticipated to be bullish, bearish, right? It depends on what it is. And then conversely, it will give you the opposing. If the actual is less than the consensus of X uh, commodity, whatever, then it is likely that this asset will be bearish or short. It will show you that. So you can kind of look at those as data markers to not so much anticipate what price is going to do, but you can use those as what I would describe as a reverse confluence. Meaning, if I'm looking at that data and you're trying to funnel me into a group herd mentality of, oh, well, if this number is positive, it's going to the moon, and I'm looking at where price is right now, again, get you in the short term to focus on the here and now, not give you the broader perspective to say, hey, in the here and now, that might be, but where are we in price? Like, what else is happening? And what else are we reaching for? Like, that's right now, but is that going to get us back? So why am I rambling on and talking to you about this? Because it's important, because we're here, right? Do you remember something back here? You remember something called this previous 4-hour current sell side liquidity for this week, not last week, for this week? We ran the buy side. So on Wednesday, here's the manipulation before the report. This is before CPI. So when you're looking at it, can you come back and can you say, well, this is absolutely going to take this out? Why would it? You could call it hindsight, but I'm not trying to give you a hindsight perspective of what you can anticipate. What I'm trying to share with you, not telling you, I'm just trying to share with you, what is the likelihood based on the reporting that's going to lead you to the believe we're coming all the way back here when overnight inventory on Monday, all of Tuesday are running away from here? Why is it coming? That like Monday and Tuesday is telling you this is not going short. I know the market was volatile the previous week, but now you're looking at it's showing, like, again, they're showing you. Don't listen. I know that's very contrarian, right? Don't listen to what they're telling you. But I am. Look at price. Because price is telling you they have no interest in this level right now. Absolutely none. What do they have interest in? Again, my opinion, this up here. Because this is where the hell we finished this week. I'm not going to mention his name because, I'm just not. And no, it's not Michael J. Huddleston. No, it is not ICT. It's not him. There's a guy that is on live every day, Monday through Friday. Shares, has a great time with his community. A lot of trade talk, talks about what he's looking for, looking at. Outstanding human being, in my opinion. Never met the guy personally, but just overall persona, really, really solid guy. Okay. I think he's been in financial markets and trading. I believe he said like something like 10 or 12 years. So he's seen a lot. So, and this is going back to the data from this week, from CPI, and then also primarily it was Thursday. So CPI didn't really do CPI, and I realize I'm on a 4-hour. You could be like, that's not a small move. You're right, it's not a small move, but it's damn sure not a big enough move to get back here. So again, it was showing you. The reason that I mentioned this gentleman is because he even said something on Thursday, which pointed to, based on, again, the financial sentiment, the market did not really react in line with what those numbers produced. It operated to the contrary. Now, I told you guys, I've only been in for 4 or 5 years. Okay? This guy's got 12 years in. He's got a baker's dozen number of years in. Far more experienced than I am. Far more. For him to verbally say, this is not really in line with what the print was. Because that's Thursday 6. This is Thursday 10. We just hanging out up here. We didn't even like even a Friday pullback. You got a little bit. You got a piece of one in here. And maybe the beginning of next week, which we'll get into here shortly, we might see a little bit more because there is a fair value gap inside the 4-hour fair value gap. But we've run away, and we still have a 2-week-old 4-hour buy side liquidity high to take out, and we have last week's 4-hour sell side liquidity low to take out. So what I'm gonna do, I'm not gonna do it at this exact moment, but I'm gonna start to clean this up a little bit this week, as I typically do. But that's where we are right now. What I did here was I was just taking a mechanical setup for Asia session, and these have kind of worked out to be somewhat telling of what is potentially going to happen the following day. So basically, I look at whatever the low is before the 8 p.m. Eastern and the high. Okay, so this is a 4-hour. I can show you this. I drop down onto a 15-minute. I'll show you what this looks like on a 15. I think I'm not gonna do a 15-minute because of just so many annotations on the chart. Like, it's gonna get confusing as hell. It's really gonna get confusing. So I'm just trying to make this as large as I can so you can see. Okay, so this is my buy side liquidity prior, and I've even labeled it as such. Buy side liquidity prior to Asia, right? And then, as I've always said, you got to go back, right? Because the market opened here. So this technically is a low. So I was marking out buy side and sell side prior to. So I had these two marked out, buy side prior. This is sell side prior, because this candle here, this bullish candle, was the 8 p.m. So that was my sell side. This was a buy side level. This was a buy side level. Well, when I say that sometimes Asia will show you, it'll tell you going into London, you can sometimes, again, you can get an idea of is the market really coming back, or what's it doing, right? Sometimes, not always. So Asia session swept buy side, didn't really give an entry or anything like that. So I said, okay, there's nothing to do here. It came back up, it took it out again. Okay. Kept rallying, got to 11:30 and exhausted itself basically at 11:30. So what I will sometimes do is I will take basically whatever that high is before the midnight open, and I will go all the way back to the low of what was just prior to Asia, which is going to be this low here. So this 745 all the way up to this 1130. And what do I do with that range? I look at it and I treat it like it is its own accumulation. And from that, I'll just simply say, okay, what side's getting taken? I'm still looking at this. I already know the buy sides have been taken. So I would anticipate that at either of these junctures, the sell side would be taken and then the long, right? but we don't get the sell side taken here. It comes back into the wick, but it doesn't clear the low because we do get the move back in. I didn't, like I told you, I didn't take any trades. Like I took paper trades this week, but I didn't take any trades per se. There is a setup here with a fair value gap. That's actually a pretty good one. There's a fair value gap here, but this is more or less like a breakaway, and also a little bit of a breaker concept, if you will. Like you could have taken a breaker entry in here. Um, I'll show you what that would have looked like. And like I said, I didn't, but it would have been something like that. It would have been something like this. Separated by this bearish. Like somebody probably would have taken this one, but I'm gonna look at the consecutive after. This is how I measure them sometimes. I'll take if this is a bearish and I'm looking for a bullish breaker. I'm looking at a consecutive run before bearish, and I'm also looking for a bearish prior to, and then up to whatever that liquidity that's been taken. So if it's a high or low. So I'm just going from basically the bottom to the top. This is basically a consummate encroachment or a 50%. That's in line. There is a fair value gap here. So I would allow price really to get all the way back here, or even as long as it doesn't invalidate the fair value gap, I would let price, get into here and then potentially consider that. So it does that. If that's your thing, may not be, but you could have gotten in here. Like I said, this presented a fair value gap here as well that, you could see tapped, but again, it did not clear it. It came back down in here. So same scenario, right? Don't clear the sell side. You could still consider this as an accumulation, but you can also now look at this and say, okay, well, you cleared this out. You ran the buy side. So it's more of a long-term Judas, if you want to call it that. If you want to look at it that way, you can. Again, Jeremy, why are you telling us all of this? It's a lot of goddamn information. What the hell? Okay, great. It is a lot of information. Again, why is that valid? I just told you it didn't take the sell side, right? Okay. So Thursday, 7 p.m. to Friday, 2:45 a.m. Could that be a range for you? Might be too massive. That might be too much. Could be. I would look at that. Why? I need my sell side taken. Why else? Well, got an order block sitting down here. This fair value has been tapped into and run away. You got another fair value gap here. But up here, we're almost at this 4-hour buy side liquidity high on a 15. Now, what might I be looking for as a signature in here? I'm going to tell you very, very, very clearly. I might disregard this structure. A few times you actually hear me say this kind of stuff. I might disregard this structure just for a moment, but I could also incorporate this structure in this fashion. So I would highlight this and just say I would treat this maybe as a very short-term accumulation. Probably to here. I was looking to see where we have like a sweep, but yeah, I could take that. I could take that. So you could, and this is where it becomes subjective, right? But I would treat this as its own accumulation because you've been moving up, up, up. This is 11:15 on Thursday. 11:15 a.m. on Thursday. And as I said, this is 2:45 a.m. on Friday. So I could take this as an accumulation, and I could look at this move 8:30 and 9 a.m. as a manipulation. So what am I now looking for? Just based on anybody that understands a power of three, an accumulation, a manipulation, and a distribution. So what am I looking for? I'm looking for it to clear this level, which would run right into clearing this 4 hour buy side liquidity from 2 weeks ago. So again, like I said, this can be looked upon as your me, you're fixing a narrative to meet your criteria. Well, yeah, I am. I am at this point because what would be reasonable? Excuse me. What would be reasonable at this point? On a 15-minute, and then I will just leave that box there for a second. On a 15, what in here is going to tell me that price is going to come run short? Now, somebody could say, well, the fact that we've had price break this low, the fact that price broke this low, price broke this low, it's come all the way down here. Okay. I could agree with that. I agree with that. But let's zoom in a little bit more and let me show you something. Let me show you why. Okay. So those are all really good reasons. They are really good reasons. But let me show you something with those lows. So this low, not inside a fair value gap. This low, not inside. Well, you could say it's inside. This one you could say is inside, right? But this is more of a pairing because it's almost coming back into this volume imbalance. It's not really volume imbalance. So this one, yeah, okay. That's inside a fair value gap. This one, let me move this out the way a little bit. Yeah. So this one, not. So not inside a fair value gap. We could say this one is and this one is not. Right? Okay. I could buy that. Let's come over here. So this massive run short, fair value offered, fair value offered, fair value offered, right? This candle closes, this one opens, it takes that liquidity, right? This makes an inversion. These bullish candles make an inversion here. The very next candle opens, it clears, it completely tells you, yep, that's an inversion. We're not interested. These three bullish candles and this bearish doji tell you we're not interested in price going lower from here. Okay, no problem. Closes, this one opens. This candle kind of confirms, yeah, we're not. Because now this is an intermediary low. This is a low, this is a high, and it's a higher low. So that's your first indicator. So this doji confirms it. Not interested. This being the second fair value, you could say, okay, Wicks did the damage, body tells the story. Well, we just explained what the story is here. So this bullish candle inverts and makes this an inversion. And while it's making this a complete inversion, it is also making this an inversion. And it is now making it a new high. So it's taken out buy side again. It's making another high here. What's it also do with that high? gives you a bullish fair value gap. Now, somebody would look at this and go, well, yeah, and then it turns around and it makes this bullish a bearish inversion. It's really not. Because in the context of inverting these previous bearish, it's pairing price here. It's still technically, you could say, yeah, that's an inversion fair value gap, but it's not an inversion for the purposes of taking price short. It's an inversion for the purpose of pairing orders to continue long. That's what this is. That's all this is. Because if you notice, once it does that, it stops. It doesn't seek any liquidity. It doesn't take liquidity here. It doesn't come back into any of these levels. Again, the wick does tell the story here, and it closes inside this body. You go back and look, it doesn't take any liquidity. It takes liquidity in the form of this wick for this, but it does not take this liquidity at all. So it maintains the fact that this bullish candle inversed two, excuse me, two bearish fair value gaps. Doesn't take that. Doesn't take the body, doesn't take the wick. And then it turns around and what? Gives you fair value, which could be considered a breakaway. It moves away. This fair value gets tapped back into. But again, the overall, I'm looking for this. I'm looking at this as a manipulation. I'm looking at this as a continuation to clear this 4-hour buy side liquidity. So this was my two for one. This is me telling you what I would be looking for this week, which is obviously to clear this 4-hour buy side. Let's just mark this out just for kicks and giggles, because it's clearly beyond mean threshold and consummate encroachment. Yeah, clearly. Still within the confines, right? It's within the confines, right? It hasn't invalidated. It would have to come down here to invalidate, but this is, again, the area of that breakaway. Now, this, just as we did back with this one, right? Because we said we did agree, yeah, this is a low inside of a fair value gap. It's not within the zone of the FVG, but in the overall structure of the fair value gap, it's still a low to be run, and that was run, right? So the same holds true here. This is a low contained within the structure of a fair value gap. So can that be run? Yeah, absolutely. I'm not going to say that I would anticipate or I expect it to be run before the delivery. Could it be? It could. I mean, I don't know. I'm like everybody else. You know, that's why we're speculators here. My speculation might be that you still have bullish support for this manipulation, if this is truly what this is, because that's what it could appear to be, right? Because if this is ultimately a manipulation, we are absolutely waiting for this to be run out. We're waiting for this high to be run out, and it could be probabilistic that if it runs this high, it's gonna take this. Like, there's not that much of a difference between the two, right? This could be the run, the fake out, short, and oh yeah, we're gonna come back up here and we're gonna grab this. So that could happen Sunday, Monday. It could happen whenever. I would anticipate this being taken this week. I anticipate the 4-hour buy side liquidity from 2 weeks ago to be taken this week. Is it possible that this gets swept out, this gets cleared this low before this? Yes. Is it possible that this fair value gap is really going to be forced back into this minimal fair value here? I don't really have too much faith in this because this is small. But Could this run here and come all the way back? Could it do could it do one of these moves? Could it do something like that? It could. It could do something like that. I mean, don't know. I don't know. What I do have, what I would think would be a fair idea is at this point, and I'm gonna zoom out, but I'm gonna stay on this 15 minute, and I'm gonna give you an idea. Okay, I'll give you an idea, and I'm gonna give you a thought. Just something to consider. And I'm gonna go a step further, and I'm gonna say, if you think it's bullshit, um, give me a thumbs down and comment. Don't just do the thumbs down. Let's do both. Be consistent. Do both. Give it a thumbs down and then comment below why this would be a ridiculous idea. Okay? And I'm gonna set this up, and then there's a reason that I'm just holding price right here. Here's the idea. Here's the thought. Okay? So the thought is we're going into the second to the last week of August. We're going actually into the last full week of August. The following week will be kind of no, that's not true. It's the second to the last week in August. That is true. We do get 2 full weeks of August. So we're going into the second to the last week. Okay, and if as you're looking at structure, and this is a 15 minute, so I'll give you that. But what are the chances? What are the chances and the probability that this stays intact? This low stays intact until this 4-hour buy side gets run out. Because inevitably what you're going to have, if you just look at it from that standpoint, okay? Let's just look at it from that standpoint. What structure delivery do you have if this happens? You have the inverse. You have the inverse of this structure. Now I'm not saying it's going to react that way or this way. You have the inverse of this structure. Okay? You've got a clearly defined low. You have a high. You have a lower low. Forget the sell side for a second. Just forget that. We're just looking at the structure at this point. Forget that. Low. Okay? High. Lower low. Takes this high. Buy side. Clears it. Makes a high. Comes back into fair value, runs long. You with me? What if this is the opposite? High, low, although this low, not sitting inside the fair value. What about this retracement making this a higher high? Is that not an area of interest that's been marked out? So again, I'm not going to change the fact that I'm looking for this to be taken. But just again, what's probable? What is the probability of it? All right? What's that probability? So let's go back to the 4 hour and let's just look at price. I know somebody's like, dude, what the fuck? Hour and 20-minute weekly bias video. I like to be thorough. I like to be thorough. So this is the 4 hour right now, right? So you know what this looks like to me? I'm laughing because I you know I'm a random dude. There's nothing special about me. Absolutely nothing. And it's just what I see. That have to be what you see. So when price opens this week, this is what I'm looking at. I would be waiting for either this 4 hour, which is a current buy side liquidity point. That is a high. Okay. That's a high. Or this 4 hour current sell side liquidity to be taken. But in the interest of leaving this pink box up here, I drew this because I said, hey, what if? I just gave you I gave you the scenario within a concept of an idea. I said, hey, what if? And this is a one take video, by the way. This is it. And again, this is one of the reasons why I like to do long format bias videos. I like to do no edits, no nothing. So if I, mix up my words or stumble or whatever it is, like it's in the video. Like there's no, oh shit, I could have said this, I could have done that. No, one take. You're gonna get you'll get it all. So if I'm wrong and I fuck up, I'm wrong. I fuck up. That's it. And I'm okay with that, right? So one take. This is it. And I know everybody, whomever watches this video, is gonna be looking back early on and be like, okay, 30 minutes, 20 minutes, 40 minutes, 45 minutes, 50, an hour. Where are we going? This is where we were going. I was just bringing. I just wanted to bring you to an idea, not to, hey, this is what, this is where, this is how, but in context and just thought, just talking. Like I say, if you don't want to hang out with me, that's fine. I wasn't the cool, I wasn't the cool kid in high school. Was never really the most popular, which is fine. So I'm used to a select group of individuals, a select group of people that are willing to hang and trade and share ideas and whatnot. So I'm cool with that. But I wanted to back into this, and I wanted to spend that time on the 4 hour. We don't necessarily have to go to the weekly to know where the weekly opened. Showed you where that was. We don't have to do that. But I felt that if we spent more time on a 4 hour for you to understand what's still available, right? Because now what we have is we don't just have 2 weeks of data. Now we have three. We have the upcoming week's data in terms of range and in terms of just what is possible, right? We even have what is possible. If you wanted, which is a little bit more tricky, it is a little more tricky, but and maybe I would I don't know that I want to talk about that yet. There's something that I do sometimes, and it has nothing to do with any kind of FOMO. It has everything to do with just saying, hey, look, let me see if I can understand how price delivers, or what the mitigation would be based on the last 4 hour candle before market opens. So there is a concept that I employ, and it's not anything um, germane to me. Like, it's not something I came up with. It's just utilizing the existing understanding, resources, and knowledge that's already made available to the public, and I just apply it to like the last 4 hour candle. So in this case, I will share it real quick, really, really, really quick. So sometimes, and like I said, it's not, it's like everything else, it's not 100% of the time. Sometimes I'll look at this candle and I'll say, okay, open very small wick up here, very small, and expanded, rejected, and closed, right? So I will sometimes just say, okay, let's examine the open. Let's change that a little bit. We'll make that a 3. And yeah, we can make that. Actually, let's make that a 4. All right, that's better. Sometimes I'll just say, okay, we opened here, and I just take the entire length of the candle. I don't take the closure. I'll just look at the range of the candle. I'm expanding this just so I can see where that wick is. All right. So I'll just take this candle range, and if you notice, I'm a creature of habit with stuff like this. Do the same thing. Now we'll go down to the 15. I'll lock this real quick. Right? And now all I'm looking at is when price opens the following day, and I realize, yeah, you could say, well, it's electronic trade hours. It doesn't, it's irrelevant. It's really irrelevant because I'm looking at price. So I'm not looking at just regular trade hour. I'm looking at price delivery. So I will sometimes do this and I'll just say, okay, what is, where might we go? Right? And I'll look back at what happened previous to this and say, okay, there's a high. Where's my most recent low? Oh, that's my most recent low. Right? And now I'm just looking for certain things. So the initial thing that I'm looking at, I would say, okay, well, can I consider that? Well, no, I don't really want to consider that an order block. I might consider this an order block. So is it possible that when price opens, it trades back into this before we get this mitigation high? So just in case you can't visually see that because I did it with my mouse, I'm looking at this saying, hey, is it possible that price trades back into this area? Well, depends on your philosophy, what you believe in. The last time that there was sell side offered before this move was back in here. So price may not get all the way back into here. It did come back in here, right? So is it possible? Yeah, it is. But like I said, it's just something that sometimes I'm not going to say I get bored or whatnot, but sometimes if I'm just looking to see what's the likelihood or the probability of what price might do, and I'm just kind of screwing around, for lack of a better way of saying that, like, hey, I might look at that candle and say, okay, what happened Sunday? Mark that out on Sunday, and just kind of, like I said, just go from there and see what happens. But but back to this week. So again, this is the range that we're in. I've already explained on the 15 minute. I'm still going to be looking for this 2 week old, now coming up on 3 week old, 4 hour high to be taken, which would also mean that I would anticipate the buy side being cleared here and not clearing immediately back into the sell side. I would be looking for this to clear, to ultimately clear this 4 hour high. And it may hang out up here for a little bit. But again, depending on whatever the news is next week, we could see a precipitous fall off to clear this sell side and to also get back into, excuse me, a more I don't want to call it range bound, but we may see some delivery short. But initially, I'm looking for buy side to be taken out. So hope you guys got some enjoyment out of this. Please feel free to leave your comments below if you agree, disagree, um, what you're looking at, and ultimately, yeah, if you're looking at another asset or another instrument, let me know what that is too. Be happy to look at that for you guys, or give me your thoughts on what you think the market's doing, where it's going. All right. So I appreciate you guys for hanging out. Thanks, and I'll see you either later or next week.